Hey, welcome to another episode of Your Health and Faith Community. I'm your host, Pastor Jackie Jackson, and as always, on behalf of myself and our producer, Anita Alexander, we want to thank you very much for taking time out of your day to join us. Hopefully, we will have some information that will improve your quality of life. I just want to go into this. We're heading into October, which means we're just a jump away from November, which starts the open enrollment again for healthcare through the Affordable Care Act or through healthcare.gov. So I want to remind you that it will be time soon to purchase or to redo your health care if you have it through the marketplace. Also, we know that Medicaid is year-round open enrollment. It never closes. So if you're not insured, if you just recently lost your job, what I'm talking about right now, those are called life-changing events. If you recently lost your job, if you recently changed jobs, moved into the state of Ohio from another state, recently re-entering into society from a penal institution, had a baby, gotten divorced, then that makes you eligible now to actually get health care through the marketplace. But for everyone else, that starts in November. I wish I had the exact date. I really should. I don't. I apologize. But the next show, I will definitely have that. And Medicaid, again, if you are not insured right now, there is no reason for you not to be. If you are single, making $16,243 a year, that's your annual income, that makes you eligible for Medicaid. That's through the state of Ohio. I mean, it's dental, it's vision, it's emergency rooms, it's doctor visits. It covers the whole gamut. And then even if you are a family of four, believe this or not, a family of four making $44,000 and a few other figures there, 44,000, I believe, 44,000, 5,300, somewhere around there. That also makes you and your family eligible for Medicaid. So go get insured. If you don't want to do it for yourself, do it for the people that love you. So, hey, I want to welcome back a guest that we've had in the past. He is a financial planner, Mr. Nelson Johnson of Johnson's Insurance Services. So, as you can see, he does a wide range of things. He is also an agent with Annie's Realtor Company. So we have a wide range of information sitting at this table. You and I are going to learn something today that hopefully will benefit our bottom line, will get us more prepared for the future, and maybe we'll get a great house out of it all at the same time. So, hey, welcome back, Nelson. Appreciate you coming.
Well, I thank you, Reverend Jackson, for that. And I also am very much appreciative to the Waycross Community Media Center, as well as Miss Anita Alexander, the producer, for asking me to come back and share some information with our audiences. Today's economy it's not a simple map or a simple picture of where the right steps, the paths, or a special formula as to what to take in order to constitute a financial plan for the family. But one thing is for sure, when a family cannot afford to plan or to save money, they actually can't afford not to have a plan to save money. Even though they might have modest means, it's not necessarily how much money a family makes, it's the use of that money. And that's what we want to speak about today, because most of the medias and most of any consensus that measure things like the unemployment, they don't have the statistics to accurately calibrate where we are with our unemployment, but we do know that it's not where we'd like to be. So keeping that in mind, with conditions like these in today's present circumstances, it's good for a family to have some type of plan in order to accommodate circumstances that will help them get through the unexpected circumstances that they might, like emergencies, planning for the future.
And I don't want to stop you, but you're kind of going into where we want to go anyway. So let's take this a step by step for everybody at home. Look, you may want to grab a pencil and a piece of paper. I'm sure there's going to be some information that's going to be really important for you that you might want to jot down. But I want to ask this first question, and it's what can a family, or no, I'm sorry, what kind of things or events should a family try to prepare for in their financial planning?
Well, some of the most important things that a family can plan for is life insurance for unexpected, untimely events. Life insurance, if they can't afford the major medical, if they don't qualify for some of the government program, ancillary products or inexpensive health plans that will accommodate hospitalization, hospital room, hospital stays, doctor's visits for a minimum amount of money, as well as planning for the future. A lot of families don't know that the institutions from the banks are not giving hardly more than 1% planning, but there are a number of insurance companies that get 4%. And this is one way that they can accumulate monies, Reverend Jackson, in regards to future planning.
So how does insurance, so I know, I don't want to sound like I'm crazy, right? So I know that, like you said, if someone, for some reason, God says it's time to go, then you're not stuck, as oftentimes you'll see people trying to figure out how can we bury the person we love. But past the burial situation, how does insurance help with my financial planning? Like I said, I got for the purpose of burying a loved one and not being strapped without the cash, and we know that can be expensive. But in what other way does me having life insurance help me in my financial planning?
I'm really glad you asked that question because
Me too.
It is such a simple question, but it has so many complex and so many dynamic and aspects to it. Because besides the burial expenses, if that person who was deceased was a contributory breadwinner, if they had any income at all to the family, then that income is going to be gone. So if they have a mortgage, if they're paying the rent, whatever financial responsibilities, then the insurance will be responsible for not only taking care of the burial arrangements, but carrying on a couple of years from that income. And this is what we need families to realize. If they're planning for emergencies, if the cars break down, or if there's an accident or a home expense, whether it be from rental, so any unexpected expenditure, if they haven't planned ahead, then they're going to be in dire straits. But if there's something as simple as saving $2 or $3 a day, $2 a day with $10 a week is $40 a month, $480. But $3 a day is $15 and $60, $720 a year. Now, with the right companies, this can add up to a substantial amount of emergency funding for unexpected needs.
Through my insurance.
Through the insurance.
All right, so let's say, because usually I think for most people, I'm assuming, I haven't done a survey, but I would think for most people when they think of life insurance, they really think about the expense of the burial. Now, I mean, I know, and I've heard stories of people having $1 million life insurance policy, which I think is really great. But I don't know if is that the common Mr. and Mrs. America to go get $1 million insurance. So I guess what I'm trying to see, even for my edification, of how does me investing, or what's the process that I go out and I get this life insurance policy beyond being for covering my burial expenses?
And that is a great mystery. We have more light for that darkness because insurance has always been looked at as just a means of burial. We had an entrepreneur, Mr. Johnson, who started Ebony and Jet magazine. He did a life insurance because there weren't a lot of insurance solicitors that offered insurance to a number of low-income persons and people. So we had companies that would accommodate these things. But insurance has always been, and there are $1 million insurance policies aren't really that common. But there are term policies. There are policies that don't accumulate a lot of money, and they cost relatively very, very inexpensively, but they can be $50,000 or a couple of $100,000 that would be able to accommodate that family's income and needs for whatever their expenses might be, from everyday living to financial planning to just having that money for that missed individual. And it doesn't cost very much. There are a number of different plans, and that's what they should be aware of.
So give us an idea. So let's just say I wanted to purchase a $250,000 life insurance policy on myself. Just a ballpark, what would I spend?
Well, again, it would depend on certain factors as to the health of the individual, the age of the individual.
Well, I'm going to give you some information on me. Go with me. I've had a heart attack. I've had a mini stroke. Heck, just, I guess, about a month ago, I was in the hospital with heart issues, found out my heart is only working at 45%. I've had heart failure 3 times. So somebody like me, a perfect picture of health, what would I be looking at?
Well, first,
Or lack of health.
Turmeric, flaxseed, and things that keep drinking a lot of water to keep your systems clear.
No.
But so far as
Not what do I need to do for health. I have a doctor for that one.
Okay,
I'm talking
all
about
right.
from a financial planning standpoint.
Well, a person having a complex amount of health issues,
Life insurance.
we have graded policies, but then again, too, there are other options. We have certain companies that would give annuities. There are deferred annuities which don't require a health insurance. Now, what they do actually is allow persons to accumulate money and to make money, not only on the local level of our medias here, but to participate in our stock market, the S&P 500, as well as foreign stock markets, to accumulate money for future dates. The one thing that is important is that, especially in the event of a person's health not being in the best of concern, they need to make their monies more useful in the way that is more productive for the future concerns, and then ensure the other family members modestly, as inexpensively, but appropriately as necessary.
So you're saying I can't get life insurance?
You can't get life insurance as easily as a person that didn't have these health concerns. But it's not impossible for you to get some life insurance, and it's not impossible for an insurance company to give you other options, which are annuities and other different products. So it's true.
What is an annuity?
An annuity is it's a program that the insurance or financial institutions, sometimes banks, offer. It takes a certain amount of money, and the greatest thing to know about annuities today is that they have a minimum guarantee, because there are so many annuities that don't have any minimum guarantee, and some of them have a zero-based guarantee, which means that in the event that during a period, and they're divided into periods from the year to months to quarters of the year, if they're not productive, they won't lose any money, but when they do make money, it's sustained on the books and is added to whenever it makes money. Some companies will give you additional points for coming in their annuity programs, but they do have to be aware that some programs don't have a minimum amount, which means that if that company or program is not successful, they can lose all the money that they have if that company doesn't do well.
So that's definitely a bigger risk.
That is a risk in that event that it doesn't have a minimum guarantee. But when it does have a minimum guarantee, and during some of their seasoned agents like myself, I can direct you towards some of the companies that will give you a more lucrative return on your dollars. And that's what we want to do. We want to speculate not where it's more difficult, but where there is more of an opportunity for that family to have that income probability and potential.
And you're talking my language now. You're saying more money. I think everybody, there used to be a movie, there was a movie called I think it was called More Money.
Yes.
More money, more money, more money. I think it was one of the Wayans brothers. And I think everybody wants to get to more money. So from a financial planning, okay, so I can get the insurance, or life insurance is one route for a family to take as a part of, not as their only, but as a part of their financial planning package. I guess I'll use that since I don't know the jargon. But what else box? So a part of my financial planning box, I'm going to put life insurance or the annuities or both in that box. What else in terms of financial planning for the family do I need to get in that box?
Well, first of all, if the family doesn't, there are limited amount of monies that they have income. They need to have their credit in line. So if they can eliminate the debts, pay off any old debts, no collections, and establish a good credit report. If they can have a good credit score,
Which is what?
it's usually in the mid to upper 500s, at least in the mid to upper 500, because it goes up to 800. But there are some programs, government and financial institutions, that are willing to give grants to qualified individuals and families for purchasing a home. And a lot of times they can find out, especially since the market has a lot of foreclosure properties from the banks and some of the real estate companies, they can find a lot of places that might even be less than what they're renting for and receive financial aid in establishing that home. And that is a way of accumulating equity and accumulating a place that they can live and eventually liquidate that mortgage and don't have the regular bills that they would have if they were renting from someone else's property.
Okay, so in my box now I have life insurance and annuities, at least with a minimum guarantee. Don't want the annuities with a zero guarantee. But then again, I guess how many people go for, hey, I'm not going to guarantee you anything, but here we go. So a minimum annuity, life insurance, and then a home, which you can either, because your credit score is good and you can go out and get the loan from the bank, or you can reach out to the federal government for some of the government-sponsored programs to be able to get the home. So now in my box, I now have a home, and that will accrue equity over time, which later on down the road I can draw from.
That's correct.
If needed. So now what else do I need to get in the box? And now when I'm talking about this box, let's say I'm low income, right? And so I'm not making a ton of money, and my credit score is 500, 490, 500.
Well, there is no shortcut in regards to making progress. Certain requirements. There are not a lot of institutions or financial places from the government that are willing to give monies to persons who have a proven record of not being successful with the use of money, because they're in business to not only accommodate those that are trying to make money, but they still have their own guidelines. They expect a certain rate of return. So the first thing that family has to do is to improve their credit score. Now, before that, if they can plan together in regards to accumulation of money and focus on the return of a dollar, there is some member in that family that is in good health, there are still a number of different insurance programs that they can put and even pay more than the premium is in order to receive a higher return.
But that's down the line, right? And
it takes time.
And that's contingent on someone dying.
Well, no, not necessarily, because some insurance companies will accumulate money that they can withdraw. They don't even have to borrow from. And some of the zero annuities, zero is at the worst, but they can go as high as 20%, and they can give bonuses. They can get 20% returns on their monies, and some of them will allow them access to the monies after the first year. But in regards to accumulation of monies and funds, there are a number of things that persons can do in regards to making money, and that's from the traditional jobs that they have, from self-employment to construction to a number of family-oriented. Janitorial services are pretty popular. Painting, anything that can provide an income, but knowing that after they get that income, having a plan of where to place that money that's going to give them a return.
And that's where you come in.
That's where we can help.
Okay.
If we can get them thinking about establishing a good credit and producing some income, then we can make it spell something. 26 letters in the alphabet spells a lot of words, and a couple of good plans with a little resources can do wonders for a family that is focused and serious.
Okay. So you mentioned, I mentioned a low income score, not income, I'm sorry, a low credit score. I said maybe 400 490,
5, yes.
500. Are there any considerations? Because let's just say it's a widow where their credit was good, but he passed along or she passed along, that took income out of the house or divorce. So it's not that the person was just buying things and just not paying their bills, but then some things, life happened. You know, not irresponsibility, but just life happened that struck them. Is there an avenue that works, or are there any programs that you can reach out to say, hey, this is the situation I find myself in because of a tragedy or a life-changing event? Or are you still pretty much just kind of out of luck?
Well, in the instance, to my knowledge, when we have persons, our beloved ones, or if they happen to be the head of the family, and they don't have insurance on that individual, then that's dire straits in regards to what their choices are. We have the Department of Human Services that accommodates certain instances, and we have some emergency funding places that will accommodate persons in regards to that type of crisis, preventative and intervention.
Well, I don't mean that because of the situation they can't buy food or pay rent. I just mean that because of that life-changing event, it kind of knocked them back a few pegs, right? So whether the head of the household, or it's just a two-income household, if one income is lost, whether it's divorce or death, then that becomes a kind of a hardship on the family. It doesn't necessarily mean that the family can't pay their rent or their mortgage. They can't buy food. You know what I'm saying? They can't pay the car note. It just means that financially it knocked them back a peg or two, and maybe some things got behind along those natures. But they've had the history. Let's say for 12 years, their credit history has been good, because they've been on point, they've paid their bills, but then this life-changing event happened, and now for the last 6 months, things are getting behind because of that situation. Are there any recourses for them?
Well, when something is cut, it's going to bleed. If there's something that's in a container and it leaks, it's going to deplete the content. So something,
or at least until you put something over it to seal
That's
up.
right. Until it's mitigated and dealt with, then we have to deal with what's left. Now, the person, the surviving spouse, even though they may not have been the major breadwinner, they may still have a reputable credit score, because sometimes not using credit can give persons good credit. And if they do have a job and a good credit score, they're able to secure financial grants, and they can purchase another home at a more affordable rate, and they would still have to accommodate, but sometimes that rent could be more than what they were paying in another institution. And there are also government agencies, metropolitan housing, that secure and give, they can place themselves on a list that would rate them according to what their family's income and place them in other places. Now, it does mean that they might have to accommodate in areas that they wouldn't.
Well, I think we kind of may be going, and it may have been the way I led the question.
Okay.
Again, not talking about a person who has gone from living in a home, had an income. Now, that's what I'm saying. They're not down to dire straits, but they're just feeling the effect of that loved one being gone, or that other financial piece being gone. So they're starting to feel the effect. So it's not that they need to sell their home and go into government housing. It's just, what is there a plan, or are there some things, or what can they do to pull themselves back up? Because I know, again, we talked about the insurance, and I get that part, and that's great. A lot of people, or put it this way, I haven't done a study, and I haven't read a study, so I don't know how many people around the country has a substantial life insurance policy. But a lot of people that I know don't possess this really insurance policy that if mom or dad or somebody dies, that they're going to run out and buy, 4 houses and set up some passive income because the policy was just that sweet. And I don't know, and then I'm going to take this in maybe in a different direction. I don't know if in the African American community, insurance had been spoken about in terms of a financial security vehicle, as much as you want to make sure that you can bury Jimmy and your sweetheart, and not so much, hey, by doing this, by setting up these policies, or here's the life insurance, but here's another step you can take that will help you accrue income beyond or not only if there's a death. So I don't know that that's been a big thing in the African American community, that our community is that well aware, if that makes more sense.
Well, that does make a tremendous amount of sense, and that's exactly why there were a number of insurance companies that were produced originally to accommodate some of the families that hadn't been approached with it. But since then, it's very important for the public to know that there are a number of different types of insurance. Mm-hmm. They don't have to have a lot of money to have a lot of insurance. Now, it won't accumulate a lot of financial ability to borrow and withdraw money, but it will provide a substantial amount that if one of the insureds were to pass, that for a little amount of money it would accommodate that person's death and allow that family to see themselves years down the road. Now, what they should do, as always, they should conserve and use their money wisely in a way that it's going to represent something that is substantial or have a rate of return. And this also can be sought out as to just seeking for advice as to what to do next.
Knowledge. Scriptures say, my people perish for lack of knowledge or information. And so sitting down with yourself or someone like you is going to give the layman or the average Joe who is not financial planning savvy an edge or a little bit more of a push in understanding how to plan for our financial future, which is something that's real important, how to plan, because we want to think the person sitting next to us or who we've said I do or whatever is going to be around forever, because we pledge, I'll love you forever, but at the end of the day, forever could end 20 minutes from now. And so it's being smart in the financial planning and looking at other ways and new ways, not just what we know, but sitting down with someone like you is going to give a wide variety of information and understanding and hopefully some level of security. So how does someone reach you to talk about, because obviously in 30 minutes, there's no way we can get to the meat. We're just still in the milk section. But if someone wanted to sit down with you, how do they reach you?
Well, I can easily be reached. I have a number of cards. 513-221-3940, 513-304-9865. And I'm so glad that you mentioned that, because there's a tremendous phobia for a lot of people, minority people that have a stigma about insurance. They have bad understanding of what insurance is and what it isn't. It's very affordable. There are so many different types of plans, and there are numerous of different strategies that they can accomplish, even if the major bread person was gone, that they can do to plan for their family. And
so talking to you would be, and what I'm crazy at myself for, we didn't get to the real estate part. So we got to get you back, and we're just going to talk about real estate, and because I'm very interested in the passive income part. So we definitely need to have that conversation. But Anita has shaking her fist at me twice and kind of let me know that time is running out. So listen, we want to thank you very much. Again, Mr. Johnson gave some phone numbers. Don't worry, it'll be up on the screen so you can write it down. Give him a call. Listen, we shouldn't wait until we're in dire straits to decide we need to do something about our financial security. So let's give him a call. Let's talk to him. Talk to your family. And let's make it work. So I want to thank you again for joining us. We'll be back again next week with another episode of Your Health and Faith Community. But until then, stay healthy. Keep your faith going. God bless you.